ทองคำแตะ 3,000 ดอลลาร์มันหมายความว่าอย่างไรสำหรับการลงทุนของคุณค้นพบการเพิ่มขึ้นอย่างน่าตกใจของทองคำสู่ 3,000 ดอลลาร์และผลกระทบต่อเศรษฐกิจ
So gold, huh? Breaking the $3,000 barrier?
It's pretty wild. Definitely grabbing headlines.
Yeah, $3,000 an ounce, first time ever. And I think everyone is kind of wondering the same thing. What's going on here? What does this mean for everything else? What does it mean for the economy, for my own investments, all that? What do you think?
Well, that's exactly why we're here today, to do a deep dive into this. Yeah, we've got a whole stack of recent reports, financial news, market analysis, all focused on gold.
Really trying to get to the bottom of this.
Exactly. And we want to make it make sense, for everyone, not get too bogged down in the jargon, just the key takeaways, those aha moments.
Love those. Okay, so let's start with the basics. $3,000, that's a real number now.
It is, yeah. Friday, March 14th, 2025. Officially in the history books.
Though some outlets were reporting it late Thursday.
Right, yeah, late Thursday the 13th, briefly.
We saw some sources reporting intraday highs around 3,390. Some even said 3,486.
Yeah, some variation there.
But this isn't like a one-day thing, right?
Yeah.
Gold has been on a tear.
Totally. Since President Trump's election last November, gold is up about 10%.
10%?
Around there, yeah. That's a lot, especially compared to other investments. And this year, even bigger jumps, up 13, maybe 14% already.
Wow.
And since the invasion of Ukraine, huge gains, 60%.
Really?
Roughly, yeah. And we can't forget 2024 either, up 27% then too.
That's a big move. So what's the main thing pushing gold up like this? Tariffs, trade wars.
I think that's a big part of it, for sure. All this uncertainty around trade. You've got President Trump's tariffs on steel and aluminum, the threat of even more tariffs. Remember all that talk about tariffs on EU wine and stuff?
Oh, yeah. I remember the alcoholic beverage discussions.
Right, so it makes everyone nervous.
Yeah, well, and the EU and Canada, they're not just taking it, right? They've got their own tariffs in place.
Absolutely. Retaliatory tariffs. It's an escalation, no doubt. And Adam Turnquist over at LPL Financial, he said as much. Basically, all these recent market dips are tied to uncertainty around these trade policies. Nobody knows what's going to happen, how it's going to play out economically.
So people are nervous, naturally. And when people get nervous, they look for safety. Gold is usually that safe haven, right?
It's a classic safe haven asset, yeah. Geopolitical instability, economic turmoil, people flock to gold. It's expected to hold its value. We even saw something interesting earlier this year, shipments of physical gold coming into the U.S.
Oh, yeah?
Big shipments, too. Seemed like folks were trying to front-run the tariffs, get ahead of the curve.
Interesting.
It was so much gold that it actually messed with trade deficit calculations for a bit.
Wow. So people are really taking this seriously. It almost feels like more than just a reaction to tariffs, though. Some of the reports we read suggested there's a bigger, more fundamental shift happening.
Yeah, I noticed that too. Structural shift was the term one of them used. And Alex Abkarian, he's with Allegiance Gold, he talked about this eroding trust in paper gold markets. Not everyone believes those numbers are telling the whole story.
And they want the real thing.
Exactly, physical gold. And there's this growing concern that the LBMA, that's the London Bullion Market Association, and the Bank of England, they might not actually have enough physical gold to cover all the demand.
That's a little scary. And we're not just talking theory here, right? There were those unusual gold futures contract activities.
You're right. Back in January, we saw this spike in requests for physical delivery of gold. Usually those contracts are settled in cash. People wanting the actual gold. That's significant. And then there's the whole arbitrage thing going on.
What's arbitrage again?
Basically, it's taking advantage of price differences. People are doing that between Western exchanges like the LBMA and COMEX, and over in China, the SGEI, the Shanghai Gold Exchange International.
Interesting. What's different about the Chinese exchange?
Well, they really like physical delivery, even offering a premium for it.
So everyone wants to hold the actual metal.
Yeah.
And it's not just individual investors either, right? Central banks are getting in on the action.
Oh, absolutely. Central banks are snapping up gold, this whole de-dollarization trend.
De-dollarization.
Yeah, basically moving away from the U.S. dollar. Kyle Rada over at Capital.com, he suggested it's because they're worried about U.S. debt and overall U.S. fiscal policy. So they're increasing their gold reserves, maybe pulling back from U.S. Treasury bonds.
Less faith in the dollar, more faith in gold. And The dollar, speaking of, it's been weakening lately. That probably helps gold too, right?
Definitely plays a part. Weaker dollar makes dollar-denominated gold more attractive for folks holding other currencies. And this dollar decline, it's connected to the trade stuff we talked about. Plus, that huge U.S. budget deficit, the U.S. dollar index, the DXY, it's down big time this year.
Think it'll keep dropping.
Could be. David Russell at TradeStation, he thinks the dollar's peaked. If he's right, we'll see more weakening in the next year or two. He called it a structural bid for gold.
So we've got trade wars, an uncertain economy, a weak dollar, all pushing gold higher. But I think this gold rally is also tied into this feeling of anxiety in the markets, right? Overall.
I think so, yeah. It's a risk-off mood in the markets for sure. Lots of economic and political question marks right now. And it's not just gold. Equities are down. Some are even in correction territory. Crude oil prices are dropping too.
So everything's down except gold.
Pretty much, yeah.
And if the trade war gets worse, that could lead to stagflation.
It could, yeah. High inflation, slow growth. Historically, gold does well during stagflation. People see it as a way to protect their wealth when inflation's high.
Right.
And there's also this talk that the Federal Reserve might cut interest rates sooner than they planned. Worries about the economy, the inflation data cooling off. Rate cuts would also weaken the dollar, help gold even more.
Makes sense. So investors are moving their money out of risky assets, things like stocks and energy, into safer bets.
Exactly. Gold is that classic safe haven. Jason Hollins at Evelyn Partners, he called it the panic asset of choice. Pretty spot on, I think.
Yeah.
And the numbers back it up. Big demand for gold right now. Physically backed ETFs are seeing their largest weekly inflows since March 2022. That's huge.
Really?
Yeah. And the SPDR Gold Trust, the GLD, their holdings are way up too. It's a big fund, basically holds a lot of physical gold. Dina Ting, she's with Franklin Templeton. She talked about this, investors shifting to safe havens like gold because they're less confident about those high growth stocks now.
Makes sense. Now, it's interesting, though, gold miners, the companies that actually dig up the gold, their stock hasn't always matched the price of gold.
It's true. There's usually a bit of a lag. The GDX ETF, which basically tracks gold mining companies, it lagged behind gold prices, especially last year.
In 2024.
Right. Gold futures did way better than the GDX. But this year, the GDX is catching up. Institutional investors are starting to look at gold miners again, seeing some potential there, especially as gold keeps climbing.
So for anyone listening who's thinking, hey, maybe I should buy some gold, what are their options? How can they get in on this?
Well, you got a few choices. ETFs. Those are exchange-traded funds. They're a pretty easy way to invest, easy to buy and sell. They do have management fees, though.
Right.
Then there's physical gold, holding the actual metal. That's kind of the ultimate safe haven, not tied to paper markets or anything. But you got to figure out storage, security, all that.
Yeah.
Then there's investing directly in gold mining companies. Potentially bigger returns if gold keeps going up, but there's more risk, too. Company-specific risks, plus the broader political and economic stuff we've been talking about.
Right.
And then there's futures and options. That's the riskiest, most complex option, really more for experienced investors. You got to know what you're doing. So yeah, if you're thinking about getting into gold, definitely do your homework first. Make sure you understand the pros and cons of each approach.
Good advice. So to sum all this up for our listeners, gold hitting $3,000, this isn't some random event. It's a confluence of factors. Trade wars, economic uncertainty, that's the big one, the driving force. Then you've got concerns about the broader economy, the weakening U.S. dollar, everyone wanting safe havens, physical gold, gold ETFs, it's all connected.
And the big takeaway, I think, is that this gold surge, it's not just a knee-jerk reaction to the headlines. This could be a sign of something bigger happening, a shift in global finance and how people think about risk, almost a loss of faith in the old ways of doing things.
Really makes you think.
Yeah. And this desire for physical gold, real assets, it's telling. People want something tangible, something they can hold on to in uncertain times.
Right, right. Makes you wonder, with all this going on, trade wars, the dollar weakening, all this, where does gold go from here? How does this impact investing in the long run? How does it affect global relations, the whole world economy? I mean, what does this tell you, the listener, about how uncertain things are right now? It's a question worth pondering.
It really is.
Definitely food for thought.
Lots to think about.
A lot to think about.